Welcome to Charts This Week. My name's David Linton. I run Updata, and quite a turbulent time we're seeing in markets. We've got the Euro story, lots of things going on. Let's just look at stock markets. Really, the sort of financial market is really the main sort of sentiment indicator we've got. This is the S&P 500 index. So even if you're trading energy or FX or stocks, this chart is still good to get a feel for the financial sentiment for globally. And we saw that we had this amazing run of a couple of months in the S&P. We fell through the cloud last week, the week before. We identified that, and so now there is downward pressure on the market. So the really big question here is how much of this move will be retraced, how far will we fall? But we should expect moves to the downside with the chart we've got at the moment. If we zoom in on that chart, we see that on the 60-minute chart, the picture has changed. We had an uptrend where we're above the cloud, we're now below the cloud, so we expect moves to the downside for stock markets. So although we might have some counter trend moves, we don't really expect this week and next week are going to be very good weeks for the stock market. And if we look at the 5 by 3 point and figure chart, we've got a downside target to 1090 at the moment. So that's quite a thrust off that high, really taking us back to before that run started, back to sort of the base of the range potentially. And if we look at the very short term targets, the 1 minute chart, we've got 1147 was a target that was put in last week, 1170, 1168. We're at 1189 at the moment. It really does suggest about 20 points downside in the market. Probably will happen about this week. We'll see around 20 points downside. We've got two targets pointing to that. It's a cluster. So quite likely that we're going to see the S&P coming off to those sort of levels. If we look at the Fibonacci targets, it's quite interesting, of course. If we go from this run here, we see that the retracement to 61.8 was really exactly where we met in terms of this run. So we found resistance at the 61.8 level. Doing it the other way, where we go on this run, we then get the retracement levels. And what's interesting is they're about 10.15. It's actually 10.14, but let's say 1,015 points, which is back to this low also, is where the retracements all start to line up. So that's a target really where we expect that we might just come and unwind all of that move. We should expect to at least unwind half of it, which would take us to around 1090, but really we could go all the way back to 1015. So this looks quite like a run and a consolidation range that we're stuck in now. So in the scheme of things, downward pressure in the short term. Euro dollar, of course, lots of news about the euro, lots of news flow with the Irish situation, but the chart is what really counts. Remember, at FX, it's hyper liquid, this market, so it's very efficient on the technicals. And here we see that we've come through the cloud on the price, so the recovery in the euro is really coming off now, and we're not through on the lagging line, but the fact that we're through on the price, it's starting to look quite bearish beyond what we're seeing in the news. And we've got two counter trend targets. One was to the top of the range back to 156. That's increasingly looking off the cards. We have this 102 and 97. So parity on the euro dollar is starting to come back into favour in terms of the longer term. So euro weakness is definitely what we're seeing here, and the 60-minute chart really highlights this. We're below the cloud. You shouldn't really be bullish short term on the euro unless we get above this cloud. 133.50 would be the level at the moment that we'd need to get through. So it's quite interesting that this cloud is telling us in the short term, it's our roadmap, we expect further falls in the euro. Here, if we look at the 1 minute chart, we see that we do have a counter trend upside target of 135.20, but we'd have to get through that 133.50 level to do that. We've got downside targets, one given last week of $1.30, 131, 129.90. It's all pointing to this 130 mark. We're at 132 this morning, so another 2 cents is looking quite likely, and that may well unwind this week. Here we look at sterling against the dollar, and we see sterling weakness as well. So we're seeing short-term dollar strength versus euro and sterling, and we're below the cloud, so dollar falling off 155.90 this morning. That's again, in line with the euro, and if we look at the downside targets, again we've got an upside target of 158. Not that exciting from where we are, and it's not yet activated. The pressure is down, 155.70, 154.30, 154.90. It does look like we're going through this 155 level. Not dramatic targets as we're seeing on the euro, but downside nonetheless. And if we look at sterling versus the euro, we can see we're quite range bound. The euro is drifting a bit lower versus sterling, so euro is the weaker currency. We're sort of are in this range. We're kicking above the cloud at the moment, but the key thing here is it's fairly directionless. Sterling has slightly the upper hand. If we look at oil, this is the daily chart of oil, and this is oil correlated to the US stock market. So we can see at the moment that oil and the US stock market are very highly correlated. Similar characteristics going on, where we had a high, we pulled back, we came back and tested the same level, similar to the S&P chart, so hence the correlation does look similar. The big question here is, can we break this high and trade higher? This has been quite a long sideways move now of about a year on oil, where we really haven't managed to get above this high 80s level into the 90s. So really quite key that level needs to break. So interesting that we correlated with the stock market. If the stock market is going to fall, does that suggest oil will fall? Well, it's a bit hard to call, but you shouldn't worry too much about the correlations. Just know that they are correlated right now, but of course that correlation can change. If we look at the point and figure targets, very insightful this chart. This line coming down here is from the 147 high that we saw in oil. We've broken through this level in the last several weeks, so we are actually effectively breaking the downtrend. This new uptrend set at the low. This is the unique thing about point and figure chart. This was set at the low. We've come back and really tested quite heavily this support level. So it does imply that there is good support on oil at these levels, and the fact that it's tested is quite key. We did have a downside target on this column off the top here, back to the low at about $35. But with the kick to the new high that we saw a couple of weeks ago, that downside target has been negated. So really, oil moving back to the bottom of the range is now off the cards in terms of this chart. We do have a new downside target of $69. It's counter trend, and we'd need to break below $80 really for that to be activated. So whilst oil's in the 80s, there is still upside. The upside target of 87 was met with 96, 111, and this one here gives us 124. So there's quite a few upside targets. The picture is still bullish longer term in oil. If we look at the 60-minute chart, we see that on the cloud at the end of last week we did cross, so we are in sort of bullish territory on the short term, so we expect quite a good week in oil. We notice here that the correlation between the stock market and oil on the shorter term basis, they're not correlated, so this is where you do need to be a bit careful with the correlations. You need to keep a close eye on those and look at the shorter term ones as well. The 1 minute chart gives us upside targets. We had an upside target of 86.10, 88.30, so we do have upside targets with an uptrend, so oil is looking bullish this week. And in fact, if we look at Brent, we've got similar targets, 87.50, 91.60 on Brent, so we've got some quite big upside targets there from these thrusts up. Nat gas, the really big story on nat gas is that it has broken on the lagging line through this cloud. It's been below this cloud for some time, and we've broken above. So nat gas has moved into bullish territory. And if we look at the point and figure chart on nat gas, we've got an upside target of $5.40. It's been activated, and we're now moving towards that target. Interestingly, the downside target that was given at about $4.60 to $3.35 was met. So we hit that target, we've met, we've now got a new upside target. That's looking quite good. The targets on the daily nat gas chart do seem to be working quite well. And then if we look at NBP, what's interesting about NBP, here we see this is the winter-summer contract, and we see here that we're breaking above. So quite interesting. Of course, we're in summer 11, and at the moment this is starting to kick up. So gas is looking bullish globally, really looking bullish on nat gas, looking bullish on NBP. And here we see the 60-minute chart on nat gas. We're moving higher again. So really quite interesting that we are hitting new highs here, 51 this morning. And if we look at the 1 minute chart, we see the targets that were given sort of middle of this month of 51.35 these targets were given back at sort of the 47 level. We're now hitting these targets. A lot of volatility in gas, the way it trades, but we are seeing that we're hitting to the upside. And in fact, this is the front month contract kicking right up here, comparing your OTC data with the ICE contract. The ICE contract now very, very liquid. You can consolidate the two and you get more accurate picture and targets with that pricing. Look at German power, so this is base load. Coming to the end of this contract, of course, is Cal 11, and what we're seeing here is that we are just nudging the top of the cloud, so we really are testing this cloud. We've had a really quite dramatic kick up, and what we see here is we're all bearish on German power until a couple of weeks ago, where suddenly volatility kicked in and we broke out, and now we do have support on power. So quite interesting that we are seeing power just kicking to the upside there. And if we look at the 1 minute targets, 50 euros 70 is the target. We haven't seen power above 50 for quite some time, but we saw that the upside targets here, 49.55, are exceeded. We do have in an uptrend situation, so we expect power. We'll probably have quite a good week this week, but watch this 1 minute chart, of course, because as the price develops, you'll get new targets kicking in, and if we do get any downward moves, they'll kick in with new downside targets. But for the moment, 50.70 is the target. Nord Pool, we had a massive run in Nord Pool in November, really quite dramatic, and we're pulling back, but we still are trading higher. More volatility coming in, but this chart is looking pretty bullish. That was the 60-minute chart. Coal, many of you will know that I've been very bullish on coal. We've had a wonderful backdrop here, and we're still kicking up. Here we see the correlation of coal versus the euro-dollar, and I put this correlation on to highlight that coal is not really that much currency driven. A lot of commodities like gold and others will be very currency driven, but not coal. Coal is really just going up and up and up, making new highs, so quite significant, and there's virtually no correlation between coal and the currency. So coal is moving on its own, and we had upside targets of 108.90, 109. That was a cluster. We're at 109 this morning, so we've hit that target. There's another target that was given earlier of $112.50. So we have moved a lot. We might be sort of nearing that move, and we might have to consolidate for a while, but it's been really quite a great trade, coal. Here we see emissions. We've been bearish on emissions until middle of November, where we started to move into a bull phase, testing the cloud this morning with the price, but not too worried about that on the basis that the lagging line is still above. Emissions need to fall below sort of 1485 to be bearish. So at the moment, pullback is probably quite healthy within this trend, and we'd expect emissions have got a little bit of upside kick to them. We do have downside targets, but we have also got an upside target of 1503, which is the one we'd favour with the trend change. 1472, 1437, 1465. There were these downside targets, but we do have this new upside target, and so I'd favour 1503 as the target at the moment, but it's a 1 minute chart. It will change as we get new price action coming on, so keep an eye on that 1 minute point and figure chart on emissions. Gold, a lot of you asked me to look at gold. Quite interestingly, that on the short term over the last week or two, the sentiment's changed. We're through on gold, very highly correlated to the dollar. Here we see the correlation. So interestingly, gold is at the moment probably a little bit range bound, but the run for now it seems to be a little bit over. We do have an upside target of 1384, which takes us back to the previous high. And so it does suggest in the very short term, this is a 1 minute chart again, in the very short term we might see a kick up in gold. So quite interesting on that chart. That's it for this week. Until next week, happy charting. See you then.